So for our consumer picks or sector picks, first we're positive on consumer, but the story here is quite different. So um, if you're a retailer of essential goods such as Pure Gold or HI, and manufacturer of those essential items such as URC and San Miguel Food and Beverage, business might have been a bit more um, positive to you last year. So for Pure Gold, you can see here net income was up. For San Miguel Food and Beverage, net income was a bit lower, driven by the oversupply in their poultry products and disruption in their supply chain. But the hit here was for restaurants. You can see um, Jollibee, they booked net losses. Max's, they booked net losses. And Shakey's or Pizza, they also booked net loss as of 9 months of 2020. And we expect them to end 2020 with a net loss. But this year could be a recovery for them, for the restaurants, because they already right-sized their operations, meaning they closed yung stores na non-operating even before the pandemic. So yung mga mahihina based on the location, on the foot traffic, so they decided to close it down entirely. But they're still keen on expanding, but they'll be more strategic in terms of where to expand or where do they tap their market. So the downside for the consumer sector is hinged on the recovery in consumer sentiment and disruptions to normal consumer behavior. For example, si Jollibee, we know that it acquired CBTL in 2019. And look at how CBTL performed during the pandemic. Of course, who wants to have their coffee delivered if you can make it at home? So matinding impact ng revenues sa CBTL during the pandemic because there's definitely a decreased demand for coffee. So that's an example in disruption in consumer behavior. So moving now to telco, we're also positive for the sector because of the strong demand for its services, namely mobile data and fixed line broadband. But since has already reported their full year earnings, you can see that net income softened a bit because the driver was mainly the fixed line broadband when these two telco players have now likely shifted their revenue mix to mobile data. But since most of their subscribers at home, the demand would really come from fixed line broadband. But once people start going out again, mag-increase uli yung demand ng mobile data, which could be positive for their revenues. So downside risk for the telco sector is, of course, capex has been elevated annually. They spend about 50 to 70 billion pesos. And of course, with the entry of third telco, I think Dito would have their technical audit end by March. So again, with the entry of Dito, there could be an increased competitive pressure for the big two telco to improve their service and increase their or increase their subscriber base both in mobile and fixed line. Okay, next for power, we are also positive for the sector because the recovery of the broader economy would basically trickle down to the sector. Um, Downside risk are unplanned outages and the coal the moratorium placed by the Energy Department on new coal projects. So this would push these power companies into a cleaner, safer alternative, which is renewable energy. So you can see here on the chart that forecast for installed capacity is may bias a renewable over the next few decades. While coal would still contribute a huge chunk, around 31,400 megawatts by 2040, but the forecast is that renewable would overtake coal sometime in the next few decades. So for our last positive sector, cement, again, once the government resumed their infra projects, this would be positive for the cement sector. Also, the government has placed safeguard duty on imported cement, which would um, provide cushion or support to local players. But on the downside, again, the safeguard duty could not curb the demand still for for imported cement. So there could still be a decrease in or the influx of imported cement could not be contained as much despite the safeguard duty. So if you can see on the chart, the government is planning to spend 5.9% of the country's GDP in infra projects. But for 2022, this could go down a bit to 5.1%. Okay, so moving now to the sectors that we are neutral. First, we are neutral on banks because, again, when you read about banks in newspapers, the focus is mainly on asset quality or the non-performing loans in their books. And with the FIST bill just signed this week, there's a possibility that banks would utilize this newly enacted law to unload their non-performing loans. So currently, NPLs is around 3.6% as of end December, and it could peak to around 4 to 6% according to some banks that we've talked to. But despite this, yung NPLs kasi naman nila mostly from consumer side. So these are from the your auto loans, mortgage loans, credit card loans, and yung chunk naman ng loan book ng mga big banks natin are on the corporate and the big middle market. So those corporate books, they haven't really defaulted on their loans, and because we're in a low interest rate environment, mas nakapagbayad pa yung mga big corporate accounts na yon. The impact really on the pandemic is yung mga um, small businesses natin and SMEs. Again, yung mga restaurants, mga travel agencies, yung mga events. So if you yung mga businesses na yun were really struggled in creating cash flows. Kaya for this year, banks would remain selective in lending to their clients. So there could be a bit more stringent KRA or something like that. And for during last year, these banks booked significant trading gains to offer cushion for their provisions because yung mga banks na to, yung provision nila for loan losses around 4 to 5 times the level they booked from a year ago. For example, si Metrobank, ang loan loss provisioning niya noong 2019 is 10 billion pesos, but in 2020 they had to recognize 40 billion in loan loss provisions. So imagine the impact of those provisioning on their bottom line. But for this year, trading gains of those levels we've seen last year could not be present. So if magkakaroon ng trading gains because interest rates are still low, that we could welcome that development. But again, it could not provide much cushion if the bank decide to book another huge chunk of provision. But we expect these banks naman na yung mga provisioning na yan na front load na nila last year. So if Metrobank booked 40 billion in provisions noong 2020, we expect them to book around mga 20 billion na lang this year. So for property, some things to look into is that offices remain strong for their portfolio. So overall, occupancy for offices is at 90%, but this is around 10-year low, coming from a 4 to 5% average 95% occupancy rate. So this could go higher to or this occupancy rate could further decrease to around 88% based on the forecasts of our real estate companies. But despite this, the lower mortgage rates could further entice property or property buyers. Kasi what happened naman is the big ticket projects or the high end real estate condominium projects of these developers, some buyers decided to refund. So these property developers refunded naman yung mga binayad, but maybe there could be takers once the economy improves. And also one thing to look into is yung reopening of cinemas, which could create a fresh revenue stream for malls because basically cinemas contribution were virtually non-existent last year after lockdown was implemented starting March. So 2Q onwards, wala nang contribution for malls. And foot traffic naman has returned na. Also on the downside, again, POGO narrative. Reports have shown that some POGOs have exited the country mainly because of the complex tax structure, higher taxes as well, and clamp down, of course, both on the mainland and from PAGCOR. So this could create further the exit of these POGOs could create further occupancy for offices. But once the traditional offices return to work, maybe they could fill up these vacancies. So gaming, we are also neutral. Again, we have yet to see casinos reopen 100%. So some are at around 30 to 50% on a dry run and trial basis lang. But positive for gaming is the approval of online betting. But on the downside, the international players are yet to return to gamble here in the country because based on revenues, they comprise half of the mix. So half mass players, then half VIP. So if we're not seeing these VIPs gambling again in the country, this could also impact the earnings of gambling or casino operators. So infra, again, we mentioned that the government is catching up on their infra plans, and these big ticket projects could really trickle down to infra, um, the sector. And as Secretary of Finance Carlos Dominguez mentioned, lining up these big ticket infra projects has this multiplier effect because these infra projects create jobs, and if you create jobs, these people would have more disposable incomes, and higher disposable income would translate to consumer spending, and our economy is basically 70% driven by consumer spending. So that's the multiplier effect that we're talking about. But on the downside, while Metro Manila is still under GCQ, which could be promoted to MGCQ, there's still site restrictions or workforce restrictions on some construction sites. And some companies have halted their business expansions. For example, yung mga high-end projects ng mga property developers. While some of those were on hold, of course, there's basically no construction activity. Then for the sector that we're only negative is oil. We know how the closure of some refineries impacted their operations. But also, we're seeing global crude prices steadily increasing from around $40 per barrel. It is now at around $60 per barrel. So refining margins could return by that time. But again, for the sector, burden on tax payments led to the closure of refineries. So they need to innovate a bit on their business. And of course, some of their clients, air transportation, still have yet to reach optimal capacity. But for cars, we can see traffic coming back to normal. So maybe there's a bit uh, return on the demand for crude. But again, crude is basically hinged on the rebound of the broader economy. So a quick rundown, we are positive on the consumer, telco, power and cement sectors. While for banks, property, gaming, and infra, we have a neutral call on those. And the only sector that we're negative is oil.